Hi everyone, my name is Erwin Cito. Together with my wife, Cherry Chan, we are the founders of Stock Hacker Academy, and here to share today how I made six figures stock hacking Bitcoin. So this is what I did. It's a little bit technical. Don't worry, bear with me. So what I did was I sold insurance on a Bitcoin related stock, and then around this point in early 2021, and then the stock price fell, and then I had to purchase the shares for $25 a share, and then you could see the stock ran up. It went up over almost to $70, and then on the way back down, I exited for around here for about just over $55 per share, and effectively I made six figures Canadian dollars in just a few weeks on this very few trades. Now, I'm going to explain what happened. But first of all, I need to take a step back and give some context. So first off, this is what regular investors do. So on this stock, for example, we're using a $20 stock, right? What most investors do is, I don't want to pay market value. I want to pay something much lower. So in this example, the stock is around just over $20.30, and then they'll put in what's called a limit order for $14, meaning the price has to come down to $14 in this example before this order is filled and the investor has purchased shares at $14. Now, what stock hackers do, what professional investors do is they sell insurance. So this is just one of 5 strategies that we teach in our course. So how does one price stock or life insurance? I'm going to use life insurance as an example to explain what we as stock hackers do. So here's an example using life insurance of, say, an accountant. If you are an accountant or you ask an insurance professional what is insurance on accountants compared to everybody else, they pay very low insurance premiums because they don't take as many risks with their lives as other people do. As a generality, you know what stock is considered low risk? A company like Walmart that's been around forever. They have very consistent returns. They're going to outlive all of us. So insurance on the stock of Walmart also returns low premiums. What's considered high risk? A rock star can be considered as having a relative high risk in terms of life insurance. If you're an underwriter of life insurance on a rock star, they tend to have life choices that are not the easiest or on one's health. And from a stock perspective or a financial investment perspective, Bitcoin is considered very high risk, and therefore insuring Bitcoin would have very high risk, come with high risk premiums. So here's a price chart to explain. This one starts from the beginning of 2020. The blue line at the bottom, that's Walmart. The stock's done wonderful. And in about 2 years' time, it's returned about 24%. That's fantastic. Bitcoin is crazy. You can see it's gone up and down violently. Hence, it's considered high risk, and therefore, to insure Bitcoin would cost a lot. In 2 years' time, it returned over 700% based on this time sample. So I own some Bitcoin. I'm personally bullish on Bitcoin. I don't have a lot. Not as much as many people on YouTube do, but I have just a bit. But my other theory is, why would I want to hold a volatile asset when I can get paid on what I considered inflated insurance premiums, right? The market considers Bitcoin risky, therefore the insurance on Bitcoin is high. In my opinion, it's overinflated. So we're going to give you some techno terms. Implied volatility. This is a number that measures what the market forecasts for price movement. So the more volatile the stock, the higher the number. Walmart, for example, and for this example and also my example, I'm going to use a company called Riot Blockchain. They're considered a proxy for Bitcoin. One cannot directly sell insurance on Bitcoin. You have to do it on a publicly traded company. Anyways, Walmart, their forecast for price movement, implied volatility, is just over 20%, right? Because it's stable. What is it on Riot, which is a proxy for Bitcoin? At the time of this presentation, over 150%, right? It's considerably higher than Walmart. And that's really, really high, just to give you context compared to the entire market as the broad market. Jim Craner also considers Riot blockchain a proxy for Bitcoin. If you like Bitcoin, one might consider buying Bitcoin. If someone hates Bitcoin, they would sell Riot stocks. All right. So what I do as a professional investor is, I'm just going to use an example here. This is a current example. So I'm going to do a 36-day contract. I'm going to insure the stock. The stock is currently $20, roughly $20. I am selling insurance on it for $14, right? So this is what stock hackers do. Me, I sell insurance on a stock in case the price falls from $20 to $14. And I will have to pay $14 per share should the price fall below $14. I only do this because my theory is the stock is good value at $14, right? Also, by doing this, I collect roughly 60 cents times 100 shares per contract. That's $60. That's cash flow. That goes into my pocket immediately. No different than when an insurance company sells you insurance, that money goes into their pocket immediately. I've generated $60 US basically out of thin air. And this is, of course, scalable depending on the size of your portfolio and how much risk you want to take on. On the other side of the transaction, who I sold to, the buyer is buying insurance. They're looking to protect their profits, or they believe the Bitcoin, the price of Bitcoin will fall. Now, this is all highly risky, right? I've already told you that. You've seen the price action of Bitcoin. It's pretty wild. And if you don't know what you're doing, if you don't have the money to cover this, this is not what for you. But this is what professional investors do. And I'm not saying just do Bitcoin. I do Walmart as well because I like them as a business. I like their ability to make money. I like having some low risk in my portfolio as well. My personal investment horizon on anything cryptocurrency and Bitcoin is really 3 to 5 years and really beyond. So I don't do this trade unless I'm willing to hold this position for minimum 3 to 5 years, maybe even 10 years. Now, understand that most of the options expire worthless. Hence, that's the reason why professionals choose to sell options, not buy options. So if if anything seems confusing to you, that is okay. Myself, Cherry, sometimes we deliver demonstrations. My demonstration is based on a very simple, an expanded demonstration on the one that I gave my kid cousin. My kid cousin is the same person who has returned 50% this past year and the year before it on his portfolio. So if you're interested, go to stockhackeracademy.ca, click on demo, and you can register for the next demo.